Hello and welcome to another episode of Nothing Ventured with me, Aarish. Today I have with me via Zoom Pac O'Shea. Pac is the CEO and co-founder of Round Treasury based in London. He launched Round in May 2023 and describes it as an AI-powered finance command system. The product is a software layer that does not touch or hold customers' funds, but integrates with banks, offers same-day money market liquidity and multi-currency accounts, a savings network with FSCS coverage, real-time two-way sync with ERPs, full AP automation and payroll processing, and an AI workflow builder that can OCR invoices, flag anomalies, and update company-level memory. He is a venture partner at Republic and was entrepreneur in residence at Entrepreneur First. Before Round, he held product and sales roles at Theodore, co-founded Matchu.io, and served on Crunchbase's user advisory board, as well as spending time working in San Francisco and in Dublin. In today's episode, we talk about how difficult it is to deal with banking for high-risk startups.
They built their entire compliance framework to be as vanilla and simple as possible.
Solving the problem of sacrificing trust for usability and liquidity for returns.
They made typically two sacrifices: trust for usability, and the second was they were sacrificing liquidity for yields.
Why CFOs will not get fired for not maximizing yield, but they will for not ensuring that there's enough cash on hand to pay the bills.
No CFO is going to get fired for not getting the most optimal returns on their cash. But what they will get fired for is not having enough cash ready and available to make payroll, those critical invoice payments that keep the lights on in your AWS.
How building treasury first meant building slower.
It's much more difficult to go top down, to go from the data layer and win the trust down into the treasury layer.
And how, as you go up the finance stack, less stuff is automatable.
As you go down that stack, more and more of that is automatable. Transfers, top-ups, payments, checking for mistakes.
How Round still insists on human in the loop.
We insist on human in the loop right now.
And how for many people thinking about AI, I don't know where to start is the most common phrase we hear. But the solution is just to get going.
If you're aware of Claude and if you're even dabbling with it, you're already in the top 1% of CFOs.
Let's get into it. Hi guys, whilst I've got you for a second, I thought I'd reintroduce myself. My name's Aarish. I am the host of Nothing Ventured, the podcast where I talk to the people behind the stories that make the venture ecosystem go around. I'm also the founder of Emerge One, a consultancy that provides fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, I'd really appreciate it if you could subscribe, comment, and like wherever it is that you listen. And if you'd ever like to have a bit of a conversation with me, do get in touch on LinkedIn or on X. I'm always up for a bit of a natter. Right, let's get straight back into it. Pac, really great to have you with me today. Thank you so much for joining. I know you've had a pretty busy few weeks with your latest raise just recently having been announced, and I think you're building and scaling at pace. So thank you very much for taking the time.
Thanks for having me.
Yeah, massive pleasure. We're going to dive straight in. So, I guess, we touched on this just now actually during our kind of quick fire round. But one of the questions I always had, having spoken to you several times, was what was kind of missing in customers' minds that led you to build Round, right? And you name your kind of core ICP as founder-led businesses who hire fractionals or delay full-time finance hires especially. So what kind of founder behaviors and mistaken assumptions did you encounter, and which concrete kind of failure modes or costs followed from those choices?
So the original insight we had, so funnily enough, when we were going through Entrepreneur First, the first idea me and my co-founder were working on was a crypto neobank for consumers.
Yep. Seen a few of those.
We realized it's not really a hair on fire problem that people care about. We quickly pivoted and iterated our way to quite a hair on fire problem, which was banking for high risk businesses. So particularly Web3 and fintech. I don't know if you've ever tried, like us, when we tried to open a bank account, it took us nearly 9 months. We're 3 years into one bank account opening. I won't say who that is. But essentially that's when we were on Entrepreneur First, that's what we got the funding for. We got accelerated IC. So within 6 weeks of the program, they invested in us. We realized the 80K they gave us was not enough to build a bank, quite naively. So we pivoted pretty quickly down into the treasury niche within the banking space. And the two core insights we had really was every single business we spoke to had at least two banks, one being a neobank, the other being a traditional bank. And they made typically two sacrifices: trust for usability. So they would sacrifice usability for the trust with an incumbent, and then they would sacrifice trust for usability with a neobank. And the second was they were sacrificing liquidity for yield. So I mentioned we were in a period of very high interest rates, and still are. And they had to, in order for businesses to get those interest rates, they had to give up liquidity. And as a business, you don't want to be, or as a founder even, you don't want to be giving up liquidity, because that means you have to plan. So you don't have the flexibility. So those were the two key problems we set out to solve at the beginning.
So what's really interesting there is, your point about every startup has two banks, right? The neobank and the trad bank. This is still very much kind of received wisdom amongst CFOs. I mean, I've literally just seen 2 chats in the last kind of week, people asking exactly that question, like who should I bank with, etc. I've had one client who, their neobank is asking for KYC on their VC, which, and we've seen a couple of situations where some of these neobanks have actually kicked clients off platform if they're venture backed, right? And this,
as soon as they raise, they're like, hey,
yeah,
you've got 2 weeks, get all your money out of her, which makes no sense.
I don't really understand it. I'm not entirely sure what the risk is from the bank's perspective per se, right? Because it's that's just cash coming in and sitting on balance sheet.
I actually do know. So it is these not banks, they're neobanks, built for micro businesses, so sole traders and so on. So they build their compliance, they build their entire compliance framework to be as vanilla and simple as possible. 20% that applies to 80% of the market. If you fall outside of that, you're considered high risk, and they can't do that. And the cost for them to then do like enhanced DD on top of those businesses outweighs the value they're going to get from those businesses. And that was like one of the original insights we had when we were doing the crypto, not the crypto neobank, just plain Jane banking for high risk businesses. It's around it's like these, like Revolut, for example, they've spent years building their compliance policy. And so it's quite like a big tanker ship. If they were to change that, it's like slow moving. And compliance teams, they have typically a 9-month tenure is the average tenure in a compliance team. So knowledge is lost very quickly as well. So it's quite difficult to serve the edge cases.
Yeah, which I get, but at some point, why do people use banks? Because banks, are a safe and secure place theoretically. I mean, SVB aside, to park their cash, right, and to allow their money to move around. And obviously, it's. I guess it comes back to your point about sacrificing trust for usability, right? The whole point, the whole reason that most startups go to a neobank is because they are often tech first. Their platforms are very, very usable, and they make life easier. And then when you remove that usability and you have to, go back to a trad bank, things can often get quite complicated and annoying. So, I mean, how do you think about, how are you solving for that? Because surely there are elements of KYC that you would probably not, need to do as well. Would you not fall into a similar kind of trap as some of these neobanks?
No, so we work with much larger. So neobanks target micro businesses. We work alongside much larger institutions like your BlackRocks, HSBCs, Santanders, who want those larger customers. But we provide essentially a orchestration layer, software layer, interaction layer on top of all of those. So businesses only need to do one onboarding with us, and everything is taken care of in the background.
Yeah, I mean, having seen your product, some of our CFOs use that. I know they are very, very enthusiastic. And again, to your earlier point, coming out of that zero interest rate period, for whatever 3, 4, 5 years prior to 2020. When I was doing sort of fractional CFO, treasury management was not a thing. There was a bit of, FX management that was required potentially, but certainly, no one was out there trying to chase yield. And now it feels like obviously that, especially if you're raising, 5, 6, 7, but even if you're raising 1 or 2 million, the ability to have your money work for you, but also have easy access to the liquidity becomes super important, for a startup, because otherwise you're losing that cash on the table. Although, and I guess this is the question. You don't want a CFO, and certainly a fractional CFO, to be sitting there kind of figuring out the right product, the right, and actually, trying to, on a case-by-case basis, kind of secure and find the appropriate yield and negotiate terms and so on and so forth. So I guess you guys are simplifying that whole layer whereby, a CFO or even a CEO or founder can just go on platform on Round, decide whether they want 30-day liquidity or they're happy with 90-day or whatever it is, look for the most appropriate yield, park, and move on, because essentially each and every deposit is almost like a separate account, right?
No CFO is going to get fired for not getting the most optimal returns on their cash.
Yeah.
But what they will get fired for is not having enough cash ready and available to make payroll, those critical invoice payments that keep the lights on in your AWS. And that was like one of the insights we had, which was like, so we originally launched with just providing access to yield in a Revolut-like experience. And we got a load of customers on board, but not a lot in the way of deposits. And our insight was that if we could automate, so we did a big customer development push over the course of like 6 months, interviewed a huge amount of CFOs. And one of the things I would do is I would get them to stack rank. I would have like, here's all the jobs to be done as a CFO, and I'd put up on a Miro board with them, rank them in order of like 1 to 5, 1 being inconsequential for the business, 5 being this is like mission critical, keeps me up on a Sunday night. Yield was always down there like around 3. And ensuring I have enough cash to meet my liabilities was always up there at 5. And essentially what we do is we marry those 2 jobs to be done. So that unlocks the ability for you to earn interest on your cash while ensuring that you always have enough cash to meet those liabilities.
Yeah, it's the existential question, right? Like, can I meet payroll? Like that is the one question that keeps, whether you're a CFO or a founder, it keeps you up every night almost, depending on what's going on in the business. I want to talk about something that I know you're very passionate about, that I am both passionate about, slightly skeptical about, but equally know that there is a huge amount of value to be unlocked, and that's kind of this whole question of AI in finance. And what I really want to understand, or from your perspective, is what are people missing and where the opportunity is, right? Because you built treasury infrastructure first rather than starting with FP&A chatbots, right? What are the trade-offs that behavior force between owning bank and ERP integrations versus shipping surface level kind of AI features? And where does that infrastructure first approach break down, if at all?
Speed to market, regulation. So one of the biggest pieces of like what we're doing is highly regulated. Whereas if we just built a chatbot that sits on top of your data, we could just like ship constantly every single day. I can post on LinkedIn without having that every single post or comment I make having to run through our compliance team, for example. So there's huge trade-offs. It's the much harder thing to do. It was the decision we intentionally made because we knew we'd have a much bigger moat and defensibility in the long run. And that by owning the treasury infrastructure, you win the right to move that money as well. It's much more difficult to go top down, to go from the data layer and win the trust down into the treasury layer. But if you can win that trust from the beginning, you have the cash in your ecosystem, you win the right to automate all the money flows out.
Yeah, I think that point around trust is probably the one that I come back to all the time, whether it's AI or any other kind of tool, right? And especially within finance, if that trust layer is missing, then it's if I can't trust the tool that I'm using to a 99% plus confidence level, then it's an automatic black mark, right? And I think, within finance, given the nature of the role, the criticality of the, of the work, you can't afford to be kind of 80% right. And we're going to talk about that a little bit later when we talk about maybe AI CFOs. But so essentially what you're saying is the treasury layer, the trust that was able to generate with your customers gave you essentially permission to then go down the rest of the stack and build that out. So how did you approach that, I guess, right? How did you move from treasury to AP management to, now you're building AI workflows as well?
So the way I typically think about finance and jobs to be done within the finance function. So we have an internal like table of like the Maslow's hierarchy, internal like financial hierarchy of needs, which is a very baseline. It's like safe storage of my cash, and then as you get up to the very very top, you have essentially your like strategic FP&A, like what the CFO is thinking about, like acquisition strategies and so on. As you go up that stack, less and less becomes, I guess, automatable, and more becomes like someone's intuition.
Yep.
As you go down that stack, more and more of that is automatable, and it's typically rules or low knowledge intensive based. So transfers, top-ups, payments, checking for mistakes, chasing people to approve. You don't need someone who's gone to college and studied finance for 4 years to do that. Anyone could theoretically do that. But the problem is that it's so fragmented and it's very, very, very manual. So essentially why we started as Treasury is to consolidate all of that into one ecosystem, to then be able to start to move up essentially Maslow's hierarchy of needs, to start automating more and more and more. And what that does is it unlocks human capital to focus on the pieces that AI and automation can't do, which is the intuition, the judgment, and like the more human side of finance.
Yeah, I mean, we're going to talk about that in a second, and I strongly agree with your with your assessment there, right? Like the transactional layer is rules based, is automatable, and it's more of a checkbox exercise in terms of approval or not. Whereas, if it's, do we decide to expand into the US versus Europe, or do we hire 5 engineers versus 2 sales reps? Like, those are much more intuition and experience based, and therefore without full context. Although we may get there, right?
We'll likely get to a point where the AI has that context.
Yeah. That's the bit where I'm kind of sitting there sweating mildly, like, and the question is always going to be like, how quickly? I mean, like, I think let's talk about it, right? Because this whole question about AI CFOs, is it reality or is it a lot of noise? If I were to force you to make the choice, right, for high risk operational decisions like payroll timing, emergency liquidity, do you hand execution and partial decision rights to AI workflows and accept kind of automated sign-offs? Or do you insist, or do you think there is a need to insist on that human CFO in the loop sign-off and accept that that's going to lead to slow operations and higher personnel costs?
We insist on human in the loop right now. The best way I think about it is self-driving cars. Self-driving cars, if Elon came out and said, hey, we're fully self-driving, you don't need a steering, you don't need to even be in the front seat, nobody would have used it. Self-driving cars began with somebody sitting in that steering wheel with their hands firstly on the wheel, and then they'll take it off for a little bit and take it on, and then they would keep their hands above it, and if it went off, they would fix it. And over time, essentially, the technology got better, less edge cases and problems occurred, trust built in the technology. And that's how we see it happening within the finance function.
I think there is, I think if I kind of forward to the end state, the point that I keep coming back to is, I guess, the accountability point, right? Which is, would you trust an AI bot or a box or a black box essentially at your boardroom, or do you want a human being, right? Because of the kind of, again, critical nature of finance and the implications it can have for the business, etc. I don't see a future where there is no human CFO. Now, what that role looks like may be very, very different for sure, right? But I think when it comes to those kind of critical decisions, despite even though an AI may be able to come out with, a 95%, 99%, even 100% accurate kind of assessment of what needs to be done, I think we're a long way away from saying, okay, we'll just trust it and go with it without having someone at least assess, the viability or the validity of that decision. Would you agree?
Yeah, I think I agree today. Nobody would want an AI in their boardroom. I can't say where that's going to be in 5 years.
Interesting.
I'm very much a human person. I'm like, we're very much on like our eternal ethos, like human first AI. We are like AI maximalists, but quite pragmatically around it. So I think there will always be some human in the loop. And what that looks like, I don't know.
Yeah, no, look, I agree, right? Like I think it'll move. I think sitting there, sitting here and saying, there's no risk and it's always going to be fine, I think would just be silly. And any CFO that's sitting there kind of with that sort of attitude is probably going to end up the way of Kodak, as it were. But yeah, to your point, like what that relationship interaction role looks like, I think is going to be really different. One thing I'd be really interested to understand, because you've run a number of workshops with CFOs, right? Well, not even workshops, really kind of hackathons almost, right? Where they've come and built, built potentially tools for ideas that they had, etc. And I know speaking to kind of the CFOs that work with us, you have a range, some that are kind of really fully kind of building out workflows, using N8N, creating agents, whatever. You have those that are kind of using Claude Cowork and, just uploading files and still, improving their cadence. And then you have someone who are just like, I don't know where to start, right? Because it feels like such a massive endeavor. And I think one of the mistakes that a lot of people make, and especially I think CFOs, they kind of think about it, okay, what can I build? And their immediate thought is, I could rebuild Zero, for argument's sake, right? Like, I'm going to rebuild a purpose-built, or I'm going to build a purpose-built kind of FP&A tool, which are huge projects, right? And require an understanding of security and how you clean the data pipeline, all of this sort of stuff, which is not simple, right? And I don't think you can necessarily vibe code that over the weekend, as it were. But what are the sort of tools that you're seeing CFOs, at these hackathons and workshops? What are the kind of things that they are ending up building?
It's a big range. You mentioned CFOs saying, I don't know where to start. That is probably the most literally the exact wording I hear the most whenever I speak to CFOs. Most CFOs are kind of panicking a little bit because they're like, AI needs to be doing something. I think just to reassure everybody, if you're aware of Claude and if you're even like dabbling with it, you're already in the top 1% of CFOs in the country or worldwide.
Yeah.
Most CFOs, 99% of CFOs have never even touched Claude. So you're already ahead of the curve. So don't worry. It's only really become useful recently. Don't worry, like you have lots of time. You're tip of the spear. I think one of the challenges I see with CFOs is you have obviously the more technical power users who will spend the time figuring out N8N, which is like N8N is, I don't know if you've played around with it. It's like quite a
I've built lots and lots and lots of workflows and agents on it. I mean, it's
actually quite a technical tool, and like you actually have to like spend a bit of time learning it. But the challenge is most CFOs don't have the time to learn these new tools like N8N, even Claude. Like I am in Claude most of my day and nights and weekends, and I still don't know fully how to make the most of it. Like I'm still not using it to its full capacity.
Sure.
And if I'm not using it to its full capacity, I don't think most CFOs are going to be able to use it to its full capacity. So there's like the opportunity and challenge within the AI space is, the challenge is how can you make it easy for CFOs to be able to automate and do a lot of this? That's the opportunity, and the challenge is Claude is built to kind of be a be-all tool to everybody.
Yeah,
it's a chat built to kind of anything you want it to do. And I think the way we're approaching it with CFOs, and like something we've learned, which is how can you provide a Fisher Price experience? So like a very hand-holdy Fisher Price. And this is always like when we went out to build Round originally, we're like Fisher Price Treasury. That's like what we said. Like dumb, simple. Tell me what to do. Yeah. I'm like, basically that's how we approach it. Yeah. And I think that's the opportunity in finance, is build something that enables CFOs to very easily and simply, without needing to learn a new tool, build agents to automate their workflows, and where they don't feel scared. They know their data is safe. There's guardrails, there's audit, there's trails.
Yeah, it's like,
I can't even remember what the original question was.
I was like, what are they building? But I mean, from what you say, it's like it's the lowest common. It's not lowest common denominator. That's the wrong word, wrong phrase. But it's basically what is the simplest, least critical tool, but most time consuming. That is just eating up your time, that is worth building. And it's interesting because, I mean, like some of the stuff that I'm attempting to build, and to your point, it's around that kind of strategic and, the intuition top of the pyramid. Like I mean, it's just really bloody hard. Like, I mean, it's not, it is by no means a simple task to try and distill thinking, right? Because essentially, if I were creating an AI CFO, right, which is what everyone says they've created, but actually what they've done for the most part is create, workflows that solve for the transactional layer, exactly as you mentioned. Because the strategic thinking side of it is about intuition and experience and context and all those things that we talked about that at the moment AI doesn't necessarily have fully baked in. But even today, it's already in a place where it's a hell of a lot better than it was 3 months ago, right? Like so I've looked at building a variety of things, and what I realized actually is trying to capture and distill the knowledge that I have over 20 whatever plus years of working in businesses is hard enough, right? And that's just one person. Now, how do you do that for, every single use case that every single CFO has seen? I mean, like you simply can't, at least at the moment. There's no easy way to extract that knowledge, and it isn't knowledge that is necessarily written down or accessible that can be used to train an LLM. Do you think that CFOs essentially, having automated a lot of that lower end of the stack, just frees up their time to think about the strategic side much more, presumably?
Yeah, that's the whole goal, right? Like, if you look at most businesses, what is the CFO actually doing? They're like in the weeds. They're doing stuff that like is not a very good use of their time.
Yeah.
And it doesn't leave much bandwidth for them to sit down, think, plan, strategize.
What's interesting as well, going back to kind of black box at the board table, we have a potential client that we're likely to work with, and they gave an example where they sent their auditors a reconciliation which had been produced by Claude, but the auditors came straight back and said, sorry, we can't accept this because we have no way of auditing, right, what it was that Claude did. You've basically given us a black box and an answer. Now, it may be absolutely 100% correct, but it doesn't actually help us audit the business, right? So there's this interplay of what is time-consuming and automatable versus what is valuable, irrespective of the amount of time it takes to create. And I think that's the challenge, right? Everyone wants to speed up, but equally, like one of the things I consistently tell people when they're talking to me about, we want to agentify all of finance, I'm like, okay, great. But remember that the trade-off is that someone is still going to have to check the homework, because it isn't at a point where you can just accept blindly, all the data, all the numbers that it's throwing out, right? And I think that for me is at the moment the biggest hurdle or the biggest challenge to making it work.
Yeah, look, right now, Claude is the newest employee in the team. Hasn't proven itself. The way I think about it is, right, AI is like, treat AI like a new employee. If you bring a new employee onto your team or onto the finance team, you're going to be checking their work. You're not going to trust. You're like, build a financial forecast. You're going to be like, let me just double check you actually did this, right? But people have this expectation with AI that, oh no, I shouldn't have to do that. I don't need to do that.
Yeah, that's dangerous. Yeah,
which is dangerous, right? That's why a lot of people like complain about it. It's like, oh, it's actually, I have to check its homework. You'd have to do that anyway if you had an employee, right? A new employee. The models are going to get smarter as you build. It depends on like the tooling and what you use, but as you would with an employee, if the model or your instance of the model or however you're using it is able to build your company context over time and learn over time and get smarter, you will naturally trust it more to do more stuff, and you will give it more rope.
Yeah,
exactly like you would with an employee. You give them more and more and more and see how they perform. And if they're executing without fucking it up, essentially, you give them more work and you trust them to do it. And eventually you get to a point where like,
I can give it,
just inform me when you're done.
Yeah, I can give it a jack. It's fine. He'll deal with it, and if there's a problem, he'll come to me, and if there isn't, then I'm pretty sure it'll be fine.
And that's the same way I see AI being adopted within the finance function.
Yeah. No, look, I do not disagree at all, and I think what it equally does, and the exciting thing is, hopefully, it does unleash, CFOs to really, really focus on that strategic side, and potentially, come up with those edge, so I can imagine if I go to a business, I've got a decision, there's a decision that needs to be made, and I might come up with, okay, here are 3 scenarios that make sense. Well, it might be that the AI comes up with 6, right? One of which is better than one of the ones I've come up with. And it just means that you can strengthen your thinking, or at least think about, other opportunities or other scenarios that you may not have naturally necessarily come up with. So I mean, I think there is a lot of opportunity for that. And to your point, right? I'm using ChatGPT, Claude, and Perplexity like all the time for different functions. And I actually don't do a huge amount of finance stuff these days. So it's quite interesting to explore it from that perspective as well. But I think the first, to that earlier point we were making about don't know where to start. I think the first thing is to understand which tools do what well and which tools don't do them as well. And then just to tinker, right? Like, and I think tinkering, and this was the massive unlock for me, was I went from, Christ, I've done another 100 days of Python course, but I still can't build, an app, to, I can ship a Telegram bot, to myself that I can use. And, I built one to do receipt capture, right? Just for the hell of it, in a matter of hours, if that, right? And I think, if you start with the simple stuff, that will give you confidence to then start exploring building more complex tools. And you guys have built now AI workflows into Round. Is it your expectation, or is it your hope, I guess, that CFOs or other finance professionals will start actually building kind of their own little tools within Round, and then potentially even creating a marketplace? Like, how do you think about that?
Yeah, it's difficult to say, honestly. It's so nascent. We made a bet a while back, kind of like not based on much customer validation, but more like we think this is like the big bet on where things are going. And we built like a very, very cool internal tool where like you can essentially talk to Round. The agents will like literally build any financial workflow visually for you in real time. And it's connected into everything from like your Slack, your Gmail, your bank accounts, your ERP. So you can essentially spin up as many agents for as many different things to automate pretty much most things within the finance function. Because the way we saw everything moving is that if you're building like what we call like Web 2.0 products, I'll give you an example. Like cash flow forecasting is somewhere we all never wanted to get into as a business.
Yeah,
we learned this early, that every single business does it differently. And we're like, this is a red ocean to get into.
Yeah, and everyone who's built in that space has like fallen over.
Exactly.
It's
screwed now, pretty much.
Yeah.
Whatever you build as like a software product has a static front end, and if someone does something slightly different way, your product is now redundant.
It doesn't work.
Now with AI, everything can be done generatively,
bespoke,
or bespoke. So like, I'll give you an example, and the thing that really like hit home for me in the last week was, so we just did a big migration from Attio to HubSpot, funnily enough.
Yeah. So CRM.
Every CRM, everybody always questions my sanity around it, being like, why would you move from Attio to HubSpot?
You've gone the wrong way round.
Exactly, right? It's like they have a way better UX. They've like much better interface and all of this and reporting. But I was like, yeah, but the integrations and just the entire like ecosystem on HubSpot, I was like, I'm not going to be using HubSpot front end. I've already built an entire like headless CRM on top of HubSpot, because I was like, it's quicker for me to build our own internal product and reporting tooling using Claude than it is to actually use the product. But I know the infrastructure, the data, the connectivity, the integrations, HubSpot is literally the best in the world at that. So that's why we actually did it that way, because we knew we're actually never probably going to be using the actual HubSpot tool on the front end in 6 months from now.
Yeah.
And that's essentially how we think about it, is how can you give the frameworks, the kind of like scaffolding, the harnesses for businesses to be able to very easily build agents and tooling that will work within Round, outside of Round, and you can interact with it. Like our whole thing is like, we like meet you where you work, whether that's Slack, WhatsApp, Notion, wherever it may be. Yeah, that's like the direction we're heading, which is like building more of a protocol layer over a product people actually interact with on a day-to-day level.
Yeah, and again, I mean, like, it just sounds like I'm agreeing with everything you say, but it's because I really do agree with everything you say. Like, I mean, to your point, like I built my CRM on Airtable and have now just got integrations via N8N or Zapier or whatever, which basically allow me, I don't necessarily have to look at Airtable to understand what's going on. I can look elsewhere if I want to, and I can go back to the source data. And I think this is exactly what's going to happen. Exactly what you described with HubSpot is, similarly what I'm thinking with users of Salesforce, et cetera. Like, are people actually going to end up not going back to these Web 2 apps as applications where they essentially just become kind of services under your MCP or whatever, right? That is just plugged into your agentic network. Yeah. And then you're just talking directly with the agentic network. The agentic network is then, is retrieving the data, presenting the data, etc. But you no longer have to interface with the original product, as it were, right?
Yeah, exactly. There's always like the question in finance, like, couldn't Claude just do this and integrate with the Rails and so on? I don't think Claude will go deep. They'll go deep on the finance data layer, but they won't go deep on the transactional layer. Claude they're going to IPO. They're growing exponentially. They're shipping at an incredible rate.
Yeah,
every time I open Claude, I have to click to refresh. Every time I open ChatGPT, I barely ever open ChatGPT anymore. There's like no updates, or I'm just like, what are you guys even doing with all that money?
Codex. I mean, like that's been their big release recently. Yeah, sure.
But as an AI company or an AI lab, to get into a regulated space, so if they wanted to actually then own the execution layer around that is like a very big lift, because in order for it to be valuable, they would have to get regulated in the US, UK, EU, country by country by country by country. They're going to battle, and there's going to be a huge amount of regulation and speculation on it. If, like I said before, it's like hard to gain trust and easy to lose trust in finance. And if one of their agents or models, or when they're testing, sends some money to the wrong place, trust is instantly broken. So I don't think Claude are going to want to get into that space. This is like how we're thinking about it, is like, how can we build the environment, the guardrails, the auditability for agents to be able to act within a regulated environment and make sure they don't hallucinate. Because we actually, as an experiment a while back, we just let agents into our product and said, right, cool, chat, do this, execute this. And it just hallucinated. It was like, yeah, all done. It was like, no, you've actually just sent half the money to the wrong person. And then I said it would say oh yeah, I've sent money from here to there, even though it wasn't integrated into those rails.
Yeah.
AI wants to please. You need to build the, I guess, regulatory framework around the Claudes and the ChatGPTs in a controlled environment, which is how we're thinking about working alongside models like that.
Yeah, and testament to that is obviously you are working with kind of banks and so on. So because again, we all know that they are slow to innovate, and banking. I mean, I remember from my days back at Deutsche Bank in 2004, 5. There were hundreds of legacy systems that they either acquired or built or whatever, and they're all trying to kind of talk to each other and failing and so on, right? So actually AI provides, for those sort of institutions, this opportunity for the first time to act, well, not the first time, but to actually consolidate that information in a meaningful way without having to, bring in massive engineering teams to do that. But equally, they would rather outsource that to an extent to someone who's built it, right? In the same way that you have. Because you've gone through exactly the pain, right? That's the whole point. You've gone through the regulatory challenges, you've gone through the compliance challenges, you've gone through the, if this and that, what is the red flag if X, Y, Z happens, et cetera, which is not inconsequential in terms of the lift to be able to do that, right? That doesn't happen overnight. So yeah, I think it's a massively exciting future. As you know, we certainly recommend Round to our clients and others as we come across them, because I think just in having spoken to you several times over the last kind of year, 2 years.
So I remember actually we spoke to you back when we were in Entrepreneur First, before we ever even incorporated the business.
Yeah. So who was that who introduced us? It was, oh gosh. I know exactly who it was, but I can't.
I'll go to my email and find it probably. If I go way back, it would have been my personal university email I probably used.
I can't even remember. It was, she was ex-SVB, turned VC, really, really like a really well-known, strong character. Now her name is just like literally slipping my mind, but I will tell you after we've recorded, because I'm sure we'll be able to dig that out. But listen, Pac, this has been a really great conversation. I know you are limited for time, so I'm just going to wrap up with a couple of questions that we do ask all of our guests. So firstly, what is one thing that you have a contrarian conviction about from any area of life, whether it's work, politics, socially, or at home?
People have this idea that startups, like the whole thing is like, oh, I want good work-life balance. Why don't you work in a startup? Working in a startup is probably one of the hardest and should be one of the hardest things you ever do in your life.
Of course.
And something I've come to learn to realize is the people who actually perform well in startups at the early stage are the people who have had a tough, not a tough upbringing, in the say that like, I was homeless and but like they have understood the value of work, understood the value of money growing up. Nothing was handed to them. They've typically worked shitty weekend jobs, night jobs, summer jobs, all the way up. And it's given them this sense of hunger and a work ethic, which cannot be learned in university or from working in a big company. And I think like something I believe is anyone who comes out of uni having never worked a summer job or any kind of crappy job and had to eat shit. Sorry, excuse my.
Nah, it's all good.
I don't think I'll ever be able to properly succeed within like a startup environment. I'm not sure if that's contrarian or not. It's just something I've really come to realize recently with because we're like growing and hiring and firing as well. So it's like a big learning I've had recently.
I don't think it's necessarily contrarian. I think it's very much true. And there is data that shows, grit, resilience. These are the sort of traits that you typically do find in certainly startup founders, right? But I think that translates down to your point at early stage 0 to 1. You need those traits because it is chaos. It is, fixing bugs at 2 a.m. It is, dealing with a customer that's pissed off, and having to fix things and having to move quickly. I am someone that doesn't necessarily prescribe to it's a 996 or whatever it is. Like all of that stuff, I think it's very easy to try and distill stuff into like one-liners and kind of clickbaity stuff. I think what is more critical is that, you understand the nature of the role and you do the work that needs to be done. Like I'm someone that I don't believe that, I should be paying people for their time. I believe I should be paying them for their output and the outcomes, right? And I don't care if they do that at 2 a.m. on a Saturday or 7 o'clock on a Monday morning. I just want it done in the right way at the right time. And I think to your point, I used to do a lot of kind of mentoring and advisory stuff. And I remember going to Oxford, I think it was. And there was someone I knew who was leading a session on working in startups, right? And the questions that were coming from the crowd, typically students, was like, oh, how do I know which is the right startup to work with, right? And I'm like, you don't, right? You don't know which one's going to be a success. But I think what a lot of students, certainly, and this is going back to like pre-COVID days, I think what they really were asking is, how do I get the Google experience or the Facebook experience in early stage? Or should I just work at Google or Facebook? And I really, what I said to those people was, first of all, ask yourself why it is that you want to work in a startup, because it is not simple, right? Like you are going to be doing stuff that you were never trained to do, right? Like it's very, very often the case, for example, that in a startup, the founder is doing the finance, right? Or the COO is doing the finance, but they don't have a finance background. Or, the office manager is doing the marketing, right? Like everyone pitches into absolutely everything. And I think there's that fallacy that, I think a lot of people just assume, well, working in a startup is cool, therefore that's what I should do. So yeah, as I said, I don't think it's contrarian, but I definitely think it's true. And finally, so that we can get to know the real you, what is something that moves you the most emotionally?
Emotionally? Oh, that's a good question. I think it's probably sobbing, but honestly, it's like my family. I think like the older I get, the more I've learned to appreciate my family and everything they've done for me. And now, like I try to make time to travel back to Ireland more than I should. You can kind of visibly see your parents getting older. You only have a finite amount of time left with them. I know we were talking about this just before the podcast. And like one of the stats that probably everyone's heard, which is by the time you go to university, you've already spent 90% of the time you're going to spend with your family. And especially living in a different country, my time's actually probably less. So I think that's something that moves me quite emotionally. And one of my drives as well is to try to give my parents a good rest of their life, and my family as well.
Yeah, I think that's absolutely wonderful. And yes, I couldn't agree more. And I think actually, as you age, it becomes more critical. There's, I don't know if you ever watched Parks and Recreation, but Aziz Ansari, who's done some stand-up since and has become quite reflective in his stand-up. But, he talks about, especially in the US, where you have people kind of traveling between states, he says, by the time you're 30, 40, you've moved states. If you're only seeing your family at Thanksgiving or Christmas, right, you've only got 30, 40, 50 times that you're going to see your family again, right? It's not years, it's actually specific moments. So think really hard about how you're spending them. I have a very large family, and we're fortunate enough that, we do see each other regularly. But I think understanding that, to your point, the amount of support and encouragement I would hope that most people have received from their parents and their wider family, it's not even about paying it back. It's just about being there and celebrating that connection, that relation. So yeah, I think that's absolutely lovely. Pac, absolute pleasure having had you on the podcast today. For our listeners, where's the best place for them to find you? Are you on LinkedIn? Are you on Twitter? Where can they find you online?
You will find me on LinkedIn mostly, Pac O'Shea, and our website is roundtreasury.com.
Amazing. Well, look, Pac, thank you so much for your time. It's been an absolute pleasure. And can't wait to do more with you in the future.
Aarish, I really enjoyed this. Thank you so much for inviting me on.